Joining us now with more on Tesla's quarter is Craig Irwin, Roth MKM Senior Research Analyst. Forget about the quarter for a minute, Craig. Obviously, we want to talk about what they're saying about these new vehicles. After that Reuters report, did Elon sort of scramble and say, well, did they abandon the Model 2 project and then they resurrected it after that came out? What happened?
So, I've been talking about the mini car since 2019, the biggest strategic bungle at Tesla the entire time I've known the company, just like more than 15 years, was when they decided to punt on the launch of the mini car, right? So what happens when you go into production is you do a bake-off. You do a bake-off between different sites to figure out which site's going to give you the best ramp trajectory, have the best economics, be well-positioned for the associated markets. And to me, it sounded like Reuters got hold of a group that lost a bake-off, right? So there's a bunch of people in an echo chamber that's relatively small saying the same thing. They're not going to cancel the mini car. They're committed to the mini car. The engineering's been done for 3-4 years now. The question is whether or not they're going to use this super modular approach, which could save them a lot of money. They think maybe as much as 30-40% reduction in manufacturing costs. I doubt it. But they need to just get them rolling and adopt technology over time. That's what they're going to do. They're doing the right thing. They're, better late than never. It's the right thing for the company.
What do you think we can expect from the call today?
Oh man, so they're going to give it a shot to get us excited about robotics and AI on the call, right? Elon's got some explaining to do. FSD, the price was only ever supposed to go up, and we got 12,000 to 8,000 this last week. And I guess subscriptions, are no longer 200 a month or 100 a month. They're really pushing hard on FSD. Personally, I'm a bear, but there are people out there that like it. We need to see attach rates go up, and for there to be some elasticity of demand here. I'm kind of skeptical, right? Everybody knows that, but they're gonna do work hard to sell that. Robotics. I don't see how you get this front center in the Tesla story. They're trying, but it's all about cars. It's about the great technology and the market penetration. The most important thing is a discussion around Thailand. I think Thailand is kind of an alternative to India or to 3 million units in Shanghai, which I think was nixed. So if you can get a China-like supply chain where you get really low costs and great manufacturing volumes. Thailand could be a big winner for the company. They may make an effort to sell us on that. Cybertruck, a lot of complaints out there. They're probably going to address them head on, and they're probably going to sell us on this robo-taxi, which may or may not need to be called a cyber taxi.
and also, let's talk about the first quarter just for a second here, because they did miss. They missed on earnings. They missed on revenue. I'm now seeing at least Bloomberg's calculation of automotive gross margin ex regulatory credits at 16.4%, which is another narrowing of that automotive gross margin. Does it matter if they're saying the mini car is coming?
Well, let's talk about the positive point in there, right? 16.4% is what we calculated it at. That actually beat the consensus number I have of 15.8. It actually beat it. And I've seen other consensuses that different groups put around that were lower than that. So you've got a 60 basis point beat with all these issues around price cuts and challenges with manufacturing and an outage in Germany. This is a big deal. 60 basis point beat on gross margins is a very good thing. They absolutely missed this quarter. 8.5% year-over-year drop in units. They need to start growing again. The mini car is what can allow them that path to grow again. And they need to get there as fast as they can.
How fast can they get there? So they're out today. They're talking about bringing up the release date. What kind of, this is something, I don't know if you heard our conversation before. What kind of credibility does Elon Musk have when it comes to deadlines? His track record is not fantastic.
Oh man, you pick a vehicle, they've all been late. And it's usually not, 3 months, it's 6 months to a year to 2 years. Robo-taxis were promised how many years ago, right? You can update the software and, the car will go make money for you at night. This is a credible target that they're setting. I think when you're willing to put more manual content into assembly and less large automation tooling, your costs are going to be higher. So you're going to wrap some dollar bills around the first vehicles, which you do anyway. But you can start sooner and learn faster and get things out and get market excitement going. That's top priority for Tesla. They need to do that right now. I mean, if they could make some by the fourth quarter, they should do it. It would be the right thing for the company.
Craig, anything that you saw in that letter today that is changing your opinion? I believe you're at a neutral on the stock. Anything you heard today that would change things?
Yeah, I'm neutral with an $85 price target. I'm very bearish on the valuation, right? I think it should not be valued at a premium to Toyota. There's nothing they have that Toyota does not, right? People were looking for a potential adjustment around the Cybertruck outlook. Doesn't look like we have that. It might happen on the call. I think there've been more challenges there than anyone hoped for. This is still a very difficult year for Tesla. It is a big negative setup. You will see more margin pressure over the course of the year. 6-7% price cuts just this last weekend is a big deal. And doing a U-turn on India is not smart. They did that as well in 2019. They should have started then. If they'd have actually gone into India in 19, the supply chain would be mature, and their costs would be great, and they wouldn't be scrambling for an alternative to Shanghai. So, there are lots of issues for them to address at Tesla. Nothing fundamentally changes the way I'm looking at this. I think the consumer is not open arms for EVs right now. I think the EVs have got to come down in price, and they've got to be a compelling proposition for consumers. Cheaper cars that get same miles, safer, better technology. That's the proposition that they're maturing into. But we've got more price cuts ahead to get there.
Hey, one last question. Sorry, Craig, because somebody just flagged me to an additional headline here that has to do with the cash flow at the company. Apparently, first quarter free cash flow was negative $2.5 billion. The consensus was looking for positive free cash flow of about $650 million. What's up there?
Yeah. So I'd have to go through that very carefully. But to me, the FactSet consensus for the quarter was 457,000 units immediately before the print, right? So the whisper number was 430, 420. So they pick your number. They missed by 35 to 70,000 units. That's a lot of money you got to spend, and the production was there for them to actually make that 457,000 original consensus forecast. So they themselves thought they were looking at a better quarter than what they posted, and it cost them some money. So they're going to have to bleed down inventory over the next couple quarters. Again, that's why they're putting price cuts in, because the consumer is not as strong as they had projected.
Craig, really helpful stuff. Thank you so much. Appreciate it.
Thank you.